Hey everyone, welcome back to the channel. Today we're diving into a crucial topic, how to prevent inflation from melting your money and uncovering the secrets of the rich. You work so hard for your money, but inflation silently eats away at its value every single day. It's like a thief in the night, slowly draining your bank account without you even realizing it. But don't worry, in this video, I'm going to give you 5 powerful methods to fight back against inflation and actually build long-term wealth. Let's get started. The first way to combat inflation is to put your money into assets that have the potential to increase in value over time. This means looking for opportunities where your money can grow, rather than just sitting idle. Think of it like this. If you keep all your money in a savings account, sure, it might be safe and sound, but with inflation, it's actually losing purchasing power every year. The interest rates on savings accounts are often lower than the rate of inflation, which means your money is effectively shrinking. It's like leaving a delicious ice cream cone out in the sun. It's just gonna melt away. The same thing happens to your money if it's not invested wisely. Instead, you want to invest your money in assets that have a history of outpacing inflation. This means looking at options that have shown consistent growth over time. One of the most common and powerful assets is the stock market. Stocks represent ownership in companies, and as these companies grow and become more profitable, the value of their stocks tends to increase. Now I know what you might be thinking. The stock market? Isn't that risky? It's true that the stock market can be volatile in the short term, but it's important to focus on the long-term potential. And yeah, there's always some risk involved, but over the long term, the stock market has historically trended upwards. This means that, despite short-term fluctuations, the overall trajectory has been positive. Think about companies like Apple, Amazon, or Tesla. These are companies that have revolutionized their industries and have shown remarkable growth. These companies have consistently grown their earnings over the years, and as a result, their stock prices have skyrocketed. Investing in such companies can be a way to benefit from their success. By investing in these types of companies, you're essentially becoming a part owner and participating in their growth. This can be a powerful way to build wealth over time. Another great option is real estate. Real estate investments can provide both appreciation in value and rental income. Real estate has a long history of being a good hedge against inflation. As the cost of living goes up, so does the value of land and property. This makes real estate a solid investment choice. As the cost of living goes up, so does the value of land and property. This means that your investment can grow in value over time. Plus, you can generate passive income by renting out your properties. This can provide a steady stream of income while your property appreciates in value. And then there are alternative investments like precious metals. Gold and silver have been valued for centuries and are often seen as safe havens during economic uncertainty. Gold and silver have been considered safe haven assets for centuries. They tend to hold their value and can even appreciate during times of economic turmoil. During times of economic uncertainty, investors tend to flock to precious metals, which can drive up their prices. This makes them a good option for diversifying your investment portfolio. The key here is to do your research, understand the risks involved, and invest for the long term. Knowledge is power when it comes to investing. Don't panic, sell when the market takes a dip. Market fluctuations are normal, and it's important to stay calm and stick to your investment strategy. Remember, slow and steady wins the race. Consistent, well-researched investments over time can lead to significant financial growth. Now let's talk about diversification. You've probably heard the saying, don't put all your eggs in one basket. Well, the same applies to investing. Diversification is the key to mitigating risk and maximizing your returns. Think of it like this. If you invest all your money in a single stock and that company goes bankrupt, you could lose everything. But if you spread your investments across different asset classes like stocks, bonds, real estate, and maybe even some crypto, you're less likely to be wiped out by a single event. Diversification helps you weather the storms in the market. When one asset class is down, another might be up. It's all about finding the right balance for your risk tolerance and financial goals. One popular approach is called the 60-40 portfolio. This means allocating 60% of your portfolio to stocks, which are considered higher risk but also higher return, and 40% to bonds, which are generally less volatile and provide more stability. But diversification goes beyond just asset classes. You also want to diversify within those asset classes. For example, within stocks, you can diversify by investing in different sectors like technology, healthcare, and energy. You can also diversify geographically by investing in both domestic and international markets. The goal of diversification is to create a portfolio that can withstand market fluctuations and generate consistent returns over time. It's like building a strong foundation for your financial future. Let's dive deeper into real estate because it's a strategy that's been particularly good to me, and it's one that I truly believe in. Real estate isn't just about buying and selling properties, it's about creating a stable and profitable investment that can withstand economic fluctuations. Remember how I said inflation is like a thief in the night? It silently erodes the value of your money, making everything more expensive over time. Well, real estate can be your best defense. By investing in property, you can protect your wealth from the ravages of inflation. Here's why. As inflation rises, so do rents and property values. This means that your investment not only retains its value, but can also increase over time. It's basic supply and demand. When more people need housing and there isn't enough to go around, prices naturally go up. When the cost of living goes up, people are willing to pay more for housing, and that benefits you as a real estate owner. Your rental income increases, and so does the value of your property. Now I know what you're thinking. Graham, real estate is expensive. The initial investment can seem daunting. I don't have hundreds of thousands of dollars lying around to buy a property, and I get it. The barrier to entry can be high. But here's the thing, you don't necessarily need a ton of money to get started in real estate. There are creative ways to enter the market. There are strategies like house hacking, which can significantly lower your costs, where you buy a multifamily property, live in one unit, and rent out the others. This way, you can offset your mortgage payments and rent out the others. This way, your tenants are essentially paying your mortgage. This way, your tenants are essentially paying your mortgage, and you're building equity in an appreciating asset, Over time, this can lead to significant financial gains. And even if you can't afford to buy a property right now, don't be discouraged. You can still invest in real estate through REITs, which are real estate investment trusts. These are companies that own, operate, or finance income-producing real estate. REITs are like mutual funds for real estate. They allow you to invest in a diversified portfolio of properties. Spreading your risk across different types of real estate, without having to deal with the hassle of being a landlord. No need to worry about maintenance or tenant issues. Real estate is a tangible asset that provides both potential appreciation and passive income. It's something you can see and touch. It's a powerful tool to fight inflation and build long-term wealth. By investing wisely, you can secure your financial future and create a legacy for generations to come. Look, let's be real for a second. In today's fast-paced world, relying on a single source of income is becoming increasingly risky. One of the best ways to get ahead of inflation and economic uncertainty is to simply make more money. I know it sounds obvious, but it's true. The more income streams you have, the more financially secure you become. The more money you earn, the more you can invest and grow your wealth. This creates a positive cycle of financial growth. And the best way to increase your income is to create multiple streams of income. Diversifying your income sources can protect you from financial downturns. Gone are the days of relying solely on a single job for your financial security. The job market is unpredictable, and having a backup plan is crucial. In today's economy, it's essential to have multiple sources of income to diversify your earnings and create financial stability. This not only provides a safety net, but also opens up new opportunities. One of the easiest ways to create an additional income stream is to start a side hustle. This could be something you're passionate about or a skill you already possess. This could be anything from freelancing your skills online, such as graphic design, writing, or consulting, to driving for a ride-sharing service, which offers flexible hours and the ability to earn extra cash on your own schedule, to starting an e-commerce business. Selling products online has never been easier thanks to platforms like Etsy, Amazon, and Shopify. The internet has created endless opportunities to make money from anywhere in the world. You can work from the comfort of your home or even while traveling. All you need is a skill, a service, or a product that you can offer to the world. The possibilities are truly limitless. Another option is to ask for a raise or promotion at your current job. If you feel you've earned it, don't hesitate to make your case. If you've been consistently exceeding expectations and providing value to your company, you have a strong foundation to negotiate from. Don't be afraid to negotiate your worth. Confidence and preparation are key when discussing your salary. And if all else fails, don't be afraid to find a higher-paying job. Sometimes the best way to advance is to seek new opportunities elsewhere. The job market is competitive, but there are always companies out there looking for talented and motivated individuals. Keep your resume updated and be ready to seize new opportunities. The key is to be proactive and take control of your income. Don't wait for opportunities to come to you. Go out and create them. Don't wait for someone to hand you a raise or a promotion. Time is valuable, and taking action now can lead to significant financial benefits down the road. Go out there and create your own opportunities. The future of your financial well-being is in your hands. The final key to beating inflation and building wealth is to never stop learning. The financial world is constantly changing, and what worked yesterday might not work tomorrow. That's why it's so important to stay informed about the latest trends, strategies, and investment opportunities. One of the best ways to stay ahead of the curve is to read books, blogs, and articles about personal finance and investing. There are countless resources available online and in libraries that can teach you everything you need to know about managing your money, investing wisely, and building wealth. Another great way to learn is to attend seminars, workshops, and conferences. These events bring together experts in the field who share their insights and strategies for success. Plus, it's a great opportunity to network with other like-minded individuals, and don't underestimate the power of mentorship. Find someone who is already successful in the areas you want to improve in and learn from their experiences. A good mentor can provide invaluable guidance, support, and accountability. Remember, knowledge is power, and the more you know about personal finance, the better equipped you'll be to make smart decisions with your money. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit the notification bell so you never miss an update. Let me know in the comments which strategy you're going to try first. Remember, the best time to start fighting inflation was yesterday. The second best time is right now. Don't let inflation erode your hard-earned money. Take control of your finances and start building a brighter future today. See you in the next video.